Good morning, MMTs, at 7:15 a.m. Pacific Standard Time. We've had a very good, wonderful 45 minutes on 7/26 of 2011. And our main focus and topic was to understand the opening bell print, the Thunderbolt of Emotion that will go through a retail trader, the kinds of mindsets that a trader would go through with extreme high volatility movements such as this Google chart, but what is the key core components behind it? But not most importantly is that I'll bring this back up. I'm going to put this Google level 2 right here. And I'm going to show the opening bell of what things do and how things happen and why they do. Okay? Now, we all know that in pre-market, Google had a 621 by 622 gap in pre-market now. But on the opening bell, right at that opening bell, as you see here clearly in this 3-minute bar, so here's where the close was, and you were gapping up. So when people seen this gapping up in pre-market, but then on the opening bell, they drop the bid down here, that creates a thunderbolt of emotion. And I would not care what kind of trader you are, whether you're a hedge fund manager, whether you're an institutional trader, whether you're a day trader, whatever it is, it doesn't matter what kind of trader you are. What does matter, though, is you don't understand the mindsets and the people behind it and why it was created and why that move was viable, but how you would freeze right then and there, whether it was this one or any of them for that matter. When it came time to buy and sell, you just freeze up because that volatility and the mechanical techniques and the gimmicks and the things that are used in the opening bell transactions were designed to take that 617. You won't want to get it here. You'll be scared to death. Why is it going down? Bam! They took it up $10 in 3 minutes, 6 minutes, 9 minutes, 12 minutes, 15 minutes, straight to the high. Now, in that transaction, what happens with the public in the buy and sell transaction, which is the buy and sell transaction in here, is when that Thunderbolt of Emotion hits down here from pre-market of being up here and they drop that bid there, bam, they know you're not going to want to react. That's how they play their cards. They know that you want to buy up here when you see it because it's above the previous day's closing price. But in pre-market, when they drop it down there real quick, oh boy, whoever's watching the video, you know darn well what goes on when you get ready to buy and sell a stock, just like I know. And you know what kind of thunderbolt of emotions are going right through you. And then what happens is the move takes off and you just sit there in amazement. Wow, whether it's this one or any of them. They all have a process. And the processes are something that need to be learned because what's going to end up happening with people is eventually it will be so overbearing after a period of time and the moves will always just go by and the same thing will happen day after day. And it's only because what happens is that emotion is created to such a degree that when it does go up, it keeps going, but you don't do anything. That's the kind of emotion that they like to create and to get that $10 move there. That's exactly what they did. 617, 22 by 27. But they knew that you didn't want to buy down here. Okay? And basically, I can tell you the way that this platform was designed is to make it where you can. And you could see everything right here to that teeny line, how that thing went straight up. And in our platform, that was everything. And we hit 0.69 ratio, a teeny of 78 pennies. It went 10.98 teenies equaled $8.52. That was from the closing print to the high. That's not called the drop down bid. When you get down there, well, naturally it's a $10 move from the swing low to the high here. But the most important thing is how that transaction happened and why you would be left out of it. Takes a lot of training. It takes a lot of training around the emotional event that occurs Whether it's this one, whether it's the Netflix one over here, it doesn't matter. That's the way it is every day. And what happens is with a lot of people in the buy and sell transaction is fear and compulsiveness can occur, and then all kinds of other psychological dialogue can come out, because what happens is some people will start buying up at the highs and it'll reverse and short down. And it's all price action volatility. There has to be a system that's used, but you need to know who are the people behind it and what their mindsets are, and how important it is to understand what the mechanical functions are and what those emotions are going to be created, so that you can take advantage of these events and how they work on the opening bell. And it does it very quickly. That was 15 minutes. And bam, that way nobody would want to buy it down there because they would be too fearful. And then it runs up. And as it goes up, they just sit there in disbelief. And this is how they get moves. But not only that, Google's in a very strong trend. And each morning they've been dropping that bid down a little bit and then running it and making higher highs. 627.50. Then it comes down, and all of this right in here, the people who buy up here, they get taken out by the market all the way down. Because they didn't do it over here, they feel left out. So they start making transactions at highs in this bar. Then bam, goes up, they're feeling pretty good. But what happens is they slide that bid straight down. Test half of this bar right here, the SMF bar. And then it's going up again. But that volatility within that buy and sell transaction is that most people cannot bear that. And the emotions that are created in human beings also create high risk. High risk to yourself, high risk, high risk. You know, it's not easy to be able to know how to keep up with this, but you have to know what's behind it all. I'm going to leave it at that note. Wonderful trade, drop down bid. Here it is. Once again, on the opening bell, little left elbow gap down to the teeny line. Immediately everything started going the right way here, running up towards 0.69. And when it did that, it was minus 0.14 here. That told you to buy. When that started to rip the other way toward that number, that was the time to make the transaction. And that's how you're going to have to work with it to remove that emotion and be able to make that transaction. Because when this turned, this went straight up. And this went straight up. And that's what you're trading, 0.69 to the high. When 0.69 wouldn't go higher, well, then it was time to sell and go short. Because it started to drop rapidly, so did that. Then, at various different points, the ratios are key to the price action. The understanding and the ability to work with something at the price action to each one of the lines that are calculated pre-market is what goes on with that buyer and the seller and that thunderbolt of emotion on that opening bell, and why most people are always left out of these things, because they're created for you to see the higher price, but when you see the lower price, oh boy, that's when that emotion get kicked in. Now, it's going to take a lot of training, it's going to take a lot of willingness, and the rewards, though, put you in by understanding what is the gimmick, how that bid and ask is created through the exchange model, who's behind it, and how do you take advantage of it, and how do you get that turn right when it happens, and you're in it because you understand it, and you don't have uncertainty, and you have competence. So you have all the certainty in the world, not uncertainty anymore. You don't have that full emotional bolt, lightning bolt going through you when they start creating these price action movements in the tape. And this is the tape, the bid and ask between the buyers and sellers and ECNs and electronic Computer machines are also a part of this, right along with who else? There are market makers on the floor, and then the rest of them, like I said, are ECNs. So this is how the emotion is created on the opening bell. And it's created not just with Google, but with many of them. We'll be doing the Netflix one next. And when it comes to buying and selling call options, same thing happens. So in our next segment, we'll be doing Netflix across the board as well. Once again, you've been given a gift.